Hello learners, welcome to C.A.S.H. In this video, we will learn how to prepare balance sheet. In previous video, we have discussed how a transaction is reflected in balance sheet, like how it passes through journal entry, then ledger, then trial balance, and after that P&L or balance sheet. In this video, with an example, we will prepare a balance sheet from these transactions. The first book where the transaction enter into is called journal entries. If you see this journal entry, you see debit, credit, date, and particulars. But if you see in this particular column, you see cash account debit here and cash account credit here. So, how to pass journal entries? Before passing journal entries, we must know prerequisites of journal entry. So, what are the prerequisites for journal entry? It is not a big thing, but just a golden rules of accounting. Why it is golden rules? Because wherever you do accounting, whether it is a big firm like having capital of 1,000 crores or a small entity with a capital of rupees 100, these rules apply to everyone. If you know golden rules of accounting, then you can pass journal entries quickly. So, what are the golden rules of accounting? Those are real account, personal account, and nominal account. These two deals with balance sheet, and nominal account deals with profit and loss account. Real account says it is the things you have with you, which means it represents something that exists and will continue to exist. For example, land, building, computer, machinery, etc. If you purchase building for your company, then it will exist in this year also and will continue to exist in upcoming year also. So the real account rule says debit what comes in, credit what goes out. Personal account, the name itself says person, so it deals with persons, where it says debit the receiver and credit the giver. So it represents persons like debtors, creditors, shareholders, deposit holders, etc. Nominal account, it deals with income or expenses or gains or losses. So the rule says debit all expenses and losses, credit all incomes and gains. Nominal account simply means it is the name given to whether the expenses, losses, incomes, and gains. Because of too many transactions, we give names to each and every transaction. Like for example, if you make sales, then it will be sales account. If you make purchase, it is a purchase account. If you pay rent, then it is a rent expenses. If you recharge, then it is a recharge expenses. If you earn income from commission, then it is an commission income. If you earn interest income, then it is an interest income. So you simply giving names. So that is why nominal account. But these accounts do not carry forward to the next year. It is like a temporary account. You use it for particular year only. Think of example like mobile recharge. If you recharge for 5 days data plan, then you have to use it within that 5 days only. Whether you use it or not, the data will expire on 5th day. Like that, in profit and loss account, we use these nominal accounts to calculate that particular year's profit or loss. If you observe, we are using the same debit and credit in all three rules. But what is debit and credit? Debit is derived from Latin word debere, which means to owe. Credit derived from Latin word credere, which means to trust or to believe. So originally, something the business owes to the owner or the owner trusts the business with. So when you received something, you were debited. When you gave something, you were credited. For example, A gives money to B. Now, A is giver and B is receiver. In A's point of view, A is credit because he is giving money, so trusting B. The personal account says credit the giver. B is debit because he is receiving money. Debit the receiver, personal account says. But in B point of view, since B is receiving, he is debit. Debit the receiver. A is giving money, so A is credit. Credit the giver, which means B owe to A. This is called double entry system. Now, where we got this double entry system? Have you ever wondered why most of the accounting terms are derived from Latin language? Because now we are using modern accounting system, which is called double entry system. The first book of modern accounting is considered to be Summa de Arithmetica Geometrica Proportioni et Proportionalita, which was written by Luca Pacioli, who is called father of accounting in 1494. Since Latin was the academic and business language of that time, all the accounting terms we use today are derived from Latin word. So this is the literal meaning of his book. If you observe, there is no term of accounting here. Then why it is considered as the first book of accounting? This was the book written by Luca Pacioli for double entry system. You can download the PDF, which is English translated, written from the source of original book, Luca Pacioli's Summa de Arithmetica. It is considered the first book of accounting because it contains how a business should maintain its books of accounts. So from that book, we got these words in our accounting. You can explore more on your own. So these are the basic golden rules of accounting that all the accounting students must know. Since we are preparing accounts in the company's point of view, when company receives something, then debit it. When company gives something, credit it. If the person is giving, credit him. If the person is receiving, debit him. If you are making expenses and losses, debit it. If you are earning incomes and gains, credit it. So in next video, we will learn how to pass journal entry.